Hi everyone and welcome to our market analysis videos here at Zenfinex. My name is Connor and I'm the Senior Market Analyst at the company, providing to you these daily videos on market analysis and also educational content. Now for today's video, I'm going to be providing to you a fresh gold forecast for September, and I'm going to do this in the usual format for those who've watched my videos before, and that's where I go through the fundamentals first, then I'm going to move on to the chart and really tie it all in with the key levels to watch out for. So as a whole, it really has been a rocky last month for gold, really. It's been on a tough ride throughout 2021. We had that huge drop at the start of August, but we have started to bounce back. Now, let's see if September can be a month where gold buys really have a bit more of a better time, really. So I just wanted to note that we've seen equities at an all-time high throughout August, which really is a representation of the low volume and liquidity in markets that you normally have in the summer months. So maybe the riskier assets like stocks seem to grab all the attention and the liquidity flows of traders more in this environment. But maybe as life returns back to normal, and when I say that in the UK the weather's been so bad it's barely felt like a summer, maybe it's time for gold to maybe steal some more of these investment flows. Now, what's the story around inflation at the moment? Well, the Federal Reserve are still adamant higher inflation won't be around for too long. The word transitory is still being used, but some experts are having doubts that this is the case. As always, there is this two sides to the story. And if they were to be wrong, if the Federal Reserve were to be wrong, could gold act as an inflation hedge for that surprise? Well, we shall see, and I know this is a topic really that's widely debated as well. Now, this moves us on nicely to what I always call the main event, which comes on the first Friday of every month. That's the jobs report, commonly known as the non-farm payroll day, and investors seem to be waiting cautiously for the latest jobs report that's about to come out, which is going to provide clues on really when the Federal Reserve could begin their asset tapering and their interest rate hiking. Now, are we going to have another upside surprise in the jobs report, putting pressure on the Federal Reserve to taper more quickly? Well, this is only going to boost the dollar if that is the case, and it's going to put pressure on gold once more. But are the effects of the Delta variant in COVID going to start weighing on employment figures as well? And then we may have the opposite effect, where gold actually starts to get weaker again, like we saw at the start of the year, and actually we see gold performing a lot better. So let's take a look at the chart now and have a look at some key levels to watch out for. Okay then, so let's have a look at the charts now, because I think there's some really interesting plays coming out here. And we're at really a critical point on the levels at the moment where we could go either side, and I'm going to quickly show you exactly what I mean. I always just quickly check what happened down here, and I always remember or remind myself of this double bottom that we had back in March, and how we've actually wicked right into this level and filled all that liquidity and then just sprung back to the upside, which is actually a really good sign for gold. But as it stands right now, we are in a critical position on the chart where we have this 4-hour order block, which was an impulsive move to the downside. Remember that massive sell-off we had at the beginning of August. We did break structure to the downside if you're following the structure at the moment, but failed to break this low here. So when you're looking at the bigger picture, I'm still bullish on gold, but as an intraday play, potentially we could be selling from this order block here. However, what I do like about what's going on with gold at the moment, if you're looking for gold buys, excuse me, is that we have this moving average cross. So we have this 100-day moving average crossing over and above the 50-day moving average. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. And the 200-day moving average, which tends to be quite a bullish sign really. Now, where could we get this buying opportunity from? Well, if I move down onto the 4-hour chart, then what I like about this price action is we could buy from something like this, and I'm going to be putting a buy limit on this level. Again, another moving average cross on the 4-hour chart, so some nice time frame confluence as well. You can see that from this level, and I've included the wick on this level just because I know gold sometimes likes to play some games, so I just like to, I know it's broadened my stop loss a little bit, but I do like to just be safer on that front. If I mark this now as our order block entry level, you can see that price did actually run up and it broke this structure high, and now we're kind of flirting around these highs that we have here, these resistance levels. So where do I see the price going for gold in September? Well, I'd like to see a situation where price runs down into our order block level. We might get a deeper test of retracement into the 200 moving average, which is now ticking to the upside. We've got room on the RSI indicator for some more upside momentum as well. A bounce into this level, and then first of all, I think it'd be safe to aim for around 1830, and the reason I say that is because I think this is where the few resistance levels are. I'd like to take some profit or some chips off the table there, just in case price starts to turn around, and say we had a really strong jobs report, and then there's pressure on asset tapering from the Federal Reserve, the dollar gets stronger, and then just put some more pressure on here, then we get stopped out of our trade. So by doing that, we are just being a bit more cautious, but we are still getting around a 2 to 1 trade here. But as a longer term take profit level, I wouldn't mind gold going up to something like this. Which is around 1855. Oh. 1855. The rest of our trade then is trading at around a 3.3R trade, and as a really longer term profit, if we get a nice, well, it'd be a great movement because we have had some more volatility. I'd like to see gold back up at 1900 as another take profit as well. That puts our trade up to around a 6R trade, so 1% risk, it would be a 6% reward. So that's what I see for gold at the moment. I do think we have some barriers to clear first, but I love this moving average play, and I love the order block entry play, and there's some nice confidence on the daily chart as well as we look to start to tick to the upside. So that's it really for gold, guys. I am looking for buys. I will be really cautiously looking out for the jobs report though, and once we do have that jobs report, I'm going to be giving an update on gold in a couple of weeks time to see where we're at as well, because I am kind of I'm a bit blindsided in terms of I'm not sure how strong this jobs report is going to be on Friday, and that's going to have a big bearing on where gold goes for September. So as always, guys, make sure you've got your notifications turned on so you do not miss out on another video. I'm going to do another video on silver for tomorrow, which is going to cover some similar topics as well. And yeah, other than that, keep liking and keep subscribing, and always dropping in your comments on the comment section, as we do always appreciate them here at ZenFinX as well. Hope everyone has a great trading day, and I'll catch you all for the next video.